private company streaming to the public their distributions. I dare any public company to do this.
And that's what we love about you, Grant.
Yeah. My lawyer's probably over there saying, hey, you didn't ask me if you could do this. That's right, I didn't.
Right. So, Andres, I think Grant said, so Robert, we've got you. I know you're walking back. So, Robert, you're first, and then I'm going to do Valerie. And then do you see any other investors, Andres?
So Daniel, I think you're an investor as well.
Yeah, we got Dick Colligan. If you're an investor, we really want these for the investors, guys, people that put money in the fund. If you haven't put money in the fund, put your hand down and let me answer the investors. They've given me money. They deserve the time.
Is that the Danny Vargo?
Robert, can you hear me? Go ahead, Robert.
We here?
Yeah.
Yeah, Robert.
There you go. I'll just make sure you got the right Robert. Hey, guy. Hey, Uncle G.
What's up?
Hey, man. Appreciate you. I'm in. My wife and I are in 2 of your funds already, Las Olas and Riverwalk. So on the distressed funds, we're planning on jumping in on that. We just picked up 3 properties ourselves, and we're going to try and leverage those. And since I got you, I do want to ask you a question because I did something I thought was good for this since the interest rates were jumping up so high.
Mm-hmm.
So we acquired a property worth about $100,000. We acquired it, flipped it, leveraged that, and picked up a $500,000 property. So I've got $20,000 out of my pocket, and I've got $650,000 worth of real estate. So we just picked up another one. We got it for about 50 cents on the dollar. We're thinking about turning around and leveraging them and putting those into the distressed fund. So right now, my liability on all 3 of these properties combined is about only about $150,000, and I've got about $750,000 worth of property.
Yeah, awesome.
But I'm afraid to over leverage. Right now.
Yeah, I wouldn't I would never over leverage. Okay, you never want to lose good real estate. Now, the only thing you do want to over leverage is bad real estate or a bad business.
Right.
Okay, because it's not against the law to do that in this country. So I never want to lose any of my real estate. It takes me forever to get it. Now, the thing I just suggested was that if it's bad real estate, then over leverage it because you want to let it go. You don't want to keep it.
Yeah, well, we want to keep all these.
Of course. So you didn't buy it because you want to lose it, right? So don't over leverage it.
Right.
I would tell everybody that's, unless you're planning on filing bankruptcy, don't ever over leverage. But if you're going to file bankruptcy, definitely over leverage it because there's no reason to file bankruptcy. So anyway, that's what I would tell you. And also, but I would tell everybody that's thinking about doing what you're doing, be very careful with this low end stuff that might look like a deal today. Real estate has a long way to go right now. Okay, because when the top of the food chain starts moving stuff and starts operating distressed, it will affect every piece of property in America. Nathan Rothschild had this saying, hey, when there's blood in the streets, buy, even when it's your blood. So everybody, all my entire portfolio, the last time we were on here, we said, hey, our portfolio is worth $5 billion. That portfolio is probably off 700 or 800 million. I've already made my adjustment, but I'm not selling it. So it's not real money. It's just some bullshit valuation anyway. Yeah. My cash flow is actually improving on my properties, not just being destroyed. So all I have is cash. That's what I want. And that's why somebody said, explain to me the 10 years. Bro, I want cash flow. Okay, this is what's going to happen in 2022, 2023. Rents are going to probably pull down a little bit. 24, they're going to be flat, and then they're going to start moving again. What's going to happen is home ownership is going to get destroyed for the next 36 months. Home ownership, mortgages, home values are going to get destroyed probably could be 20, 25, 30%, but it won't matter because
that much.
It could, but the thing that'll stop it from falling like a knife is the rents. And the rents didn't exist in 2012. If the stripper would have had Airbnb, she'd own 7 or 8 homes right now. But she didn't have the rental income back in 2010 and 11. Now you have it. So that rental income is going to come in and save all the single family, but it's still going to take a hit because there's going to be drama in the marketplace. Again, that's why the 2 deals you're in, bro, that's as good a real estate as you can buy. One of those pieces of real estate that you're invested in, Las Olas, that is worth $250 million. When I sell that piece of real estate in 2032, if I ever sell it, it'll be worth $500 million bucks. I'll bet you dinner anywhere in the country. I sell that thing for $500 million. And your money will be, it'll go up 4x plus your cash flow. Plus you were in a perfect asset. Now that other stuff that you're buying ain't gonna make that kind of money no matter what happens.
Yeah.
Okay.
We've been to Las Olas, and that's a sweet property.
Dude, come on, sweet. You got a very restricted vocabulary. That's how you describe it.
I put my fucking naked feet in the infinity pool on the roof. So
Well, bro, look, if you're not paying rent,
and the water tasted sweet, Grant. That's where he got that from. The water tasted sweet.
Yeah.
Well, it tasted sweet after I stuck my stinking foot in it.
Yeah. Thank you, man. Appreciate you. Tell your wife hello, all right? Okay, let's.
Thanks, Robert. Daniel, go ahead, Daniel, and then I'm going to go to Dick.
Awesome. Can you guys hear me?
Yeah.
Gotcha.
Great. Rye, GC, I just want to say I appreciate you guys. I was really hoping to get into that promenade. I'm a credited investor, but I had just missed the cutoff. So the question I have is are my funds automatically just put into Fund 22, or is there like a process that I got to go through for that? Like, how does that work for somebody who just missed?
No. Look, as long as you want to roll into the next deal, just tell the team, hey, I want to be, and you'll be first in line, right? Because you missed that other one. So what he's talking about is it's first come, first serve, guys. I had a personal friend of mine, not just a personal friend, but a partner in another business, and he missed a deal I did last year. And I said, I don't know what to tell you, bro. Like, you drag your feet. You didn't do what I told you to do. I already gave the positions to other people, so I can't call up somebody and say, Dick, I'm sorry, bro. I got Brandon. Brandon's my buddy. So it's first come, first serve. So you're sitting there let Andres know, hey, I'm ready to roll, and I trust Grant, and let's go. And I just want to say on the trust, how much you got with me right now, Daniel?
I got my first 100,000.
Yeah, how liquid are you?
I mean, like, how much liquid do I have?
Yeah.
Probably about another 100, 150.
Where's the money sitting?
In cash.
Yeah. So cash is being destroyed, guys. You're going to be rewarded a little bit by the banks. It's being destroyed. Now, I don't know what this Jeremy, what's the guy's name? Powell. I don't know what this Powell guy's up to, but it ain't good. It doesn't make any sense. This is what I see happen. COVID happened, then a war in Ukraine. We got tired of both of those conversations, but Americans got very tired of the COVID conversation, so they stopped it. Once America was fed up, left and right, everybody's like, I'm done with this vaccine. I'd rather get sick. I'm done with COVID. I'd rather get sick. I'm done with the mask. I'd rather get sick. Once that was over, and I said this would happen, we'll be in a war. We were in a war the next day. As soon as the COVID conversation stopped, we were talking about Ukraine, Putin, blah, blah, blah. America really didn't buy the Ukraine war. Most Americans are against sending money over there. Whether you are or not, it's not the issue. So the public has to be for something for them to continue to do something. So what happened was the war stops, the war story mongering stopped, and boom, all of a sudden we got inflation and interest rates. All three of those things have one thing in common. They're invisible to Americans. COVID was invisible, the war is invisible, and inflation is invisible. And I don't know what's going on, but I know this, that something's funny going on. And it's not going to be good for the U.S. dollar. And what?
I mean, I'm in residential real estate. I sell it for a living, and it's the market has done a complete 180 in the last 8 to 10 months.
That's what I mean, violent.
Yeah.
You had 25 offers. Now you don't have an offer for 25 days.
You have none.
Yeah, exactly. Yeah. Thank you, man. I appreciate you. I won't let you down. Appreciate your trust.
Yeah, thank you. Appreciate you, Grant. Thank you.
And Daniel, so obviously now you know that now's the time to buy. So when you get on that phone with Andre, it's just double and triple all that cash that you have. It's not doing anything. It's going to earn 3.5% while you wait for this next opportunity for Grant. So you didn't miss anything. Add to your piece, and let's go. My initial goal for you, and for every investor is $1 million.
That's mine as well.
Go ahead, Valerie.
That's actually that's what I have.
Yeah, and I would tell you, Daniel, I would take whatever money you have, 100. If you have $250,000 in cash, I would put all of it in this deal, knowing what I know is going to happen on this deal. Okay, Valerie, go ahead.
Hi, thank you so much. So I have two questions. I'm invested in Las Olas and also in Riverwalk, which I love, and I agree with your politics a lot. So my question has to do with your future properties that you want to purchase and how you decide to mortgage them. So obviously the interest rates are really high. So is your point right now is to finance as much as possible with the investors so that you don't have to take financing, and then you can put some financing on it at a later date when the rates are lower?
So I was on a call with a guy today. We're surprisingly, we're getting phone calls every day. Hey, I got this deal, blah, blah, blah. I said, show it to me. Boom, they show it to me. It was under contract for blah, blah, blah. The guy's going to walk away from a $5 million deposit. That's how bad they don't want to be tied to this deal. Right. I said, okay, you got my attention. They're like, we want to come in at 15% below that number, and we're going to get a loan on it. I said, how much is it? What is it, $85 million, right?
Yeah, the new one, yes, 85.
I said, how about I just write a check for him? We just kill this thing. So I said, how many people are going to offer to write a check for this deal right now? Nobody. There's a second deal right here in Miami, just up the street, that is owned by a group that I've mentioned more than once tonight. They had this property on the market for $108 million, and they're probably going to get an offer this week for $90 million. One check, I'll buy it, I'll close in 7 days, and it's over with. I'm going to find somebody that bites this. Somebody's going to bite on what I'm doing. Okay.
So can I ask you?
So then what I'm going to do is I'm going to wait for these interest rates I'm going to wait for this thing to fall apart, and then I'll go back to the debt market and I'll lock in on some very low interest and then redistribute to our investors. So let's say, I'm just going to pick a number. Let's say I steal a deal for $90 million. I write a check. I'm going to go, let's say I believe I'm just making a projection. I don't know that I'm right, but I believe interest rates will be lower 18 months from now than they are today. I think I'm going to be able to lock in money that's 4% or less. That's what I've been averaging across my portfolio for the last 12 years, believe it or not. And when that happens, I would go back to the debt market. I would put a $50 million loan on this deal, redistribute $50 million to our investors. You guys get your money back in exactly the same proportion that you gave me money. And we now own it, and our cash flow will actually explode.
So in the meantime, before you get the debt on the property, how do you determine, is it like 75-25 based on how do you determine what you're giving to your investors based on paying cash? You're obviously not going to, you're going to imagine that there's a debt on it.
No, I won't have a debt on it. If I don't have a debt, I don't imagine anything. I treat everybody the way it really is.
So really the key for us right now is to invest in properties that you're going to pay cash.
No, not necessarily. Not necessarily. If maybe I buy a deal that the guy has 2.8% debt on it, right. but he's got a bunch of equity and he's got to sell 6 of those. Look, these guys are going to have to sell their good stuff, not their bad stuff. Nobody's going to want their bad stuff. This is Monopoly. This is Monopoly, Valerie. I'm playing Monopoly, and the guy has Park Place, and he has Broadway, and he has the red stuff, and he has the railroads, and he went to jail, and he stayed in jail too long. He can't roll out, and he starts going through money, and then he's like, bro, I need to sell my stuff. And I'm like, really? When there's only one guy at the table that has any money, he's going to end up owning these properties for a discount so the guy can get out of jail and continue to play the game. Now, I know that analogy seems very simple, but that's actually what is happening right now.
Yeah. Well, I'm excited to see what's next on the table. Just one other quick question. You're coming to Toronto, I understand.
Yes,
in May?
yeah. Somebody told me I am.
Okay. I just wanted to make sure because I'm from Toronto, so and
Yeah.
I haven't had a chance to come by to Florida anytime soon. So, and you're going to be doing a whole real estate course of sorts.
I don't know what I'm doing. They when I get there, they'll tell me, "Hey, go do this." So I'll do it. But I think it's February, right? When is it?
I heard it's May. No, you don't want to do it in February. It's pretty cold.
Okay.
Yeah. Okay. Well, thanks a lot, and I look forward to seeing you in May.
Thank you, Valerie. Okay, how about one more, and then you guys handle the rest, Ryan?
Sounds good. Dick, go ahead.
Hey, thank you, guys. Thank you, Grant. Really appreciate you doing this. Read all your books. I'm in 4 year funds. I'm swearing the Kool-Aid, baby. My question for you, I've been in touch with Patrick in your office and talking about the adjustable versus fixed debt on some of the properties. I understand you got some breakage costs on the fixed debt and on the floaters.
Right.
That rolls off in about 2 years.
Yeah.
Do you think at that time, are you seeing enough interest in the stuff that's floating rate that you would look to make a move on that in about 2 years?
I wouldn't sell any of the assets I have in 2 years. So if I had to recapitalize the assets, if I had to, I would personally recapitalize the assets I have. I definitely wouldn't sell anything I have because we need more than 2 years for me to get what I wanted out of these assets. I never sell in a bad cycle. Anybody that's selling anything today is basically waving a flag saying I'm in trouble. There's zero reason for anybody to try to sell anything at this moment. It only indicates their distress, their timing, their funds, their debt. They could be going into a technical default. I'll get you, Danny. They could be going into technical default. Many of these loans will, by the way. There could be $500 billion that I know of that could go into technical default. So in 2024, do I want to sell any of my assets? Las Olas, no chance. Miami River, not a chance. Weston, not a chance. Like, I don't want to sell any of these till like 2032, if I ever sell them. Really what I want to do is I want to refinance all these properties. And I want to return the capital to the investors and keep the assets.
So you think for 15th Street and Waterworks, for instance, you look to refinance when that comes, and that looks more attractive?
Yeah. And by the way, I have 3 years with two. Don't I have 2 1-year extensions, Ron?
You do.
So I don't have any. Like I don't have a gun to my head right now.
Yeah. And Dick, for all the other investors on the call too, Grant is a buy, hold investor in real estate. The goal is to own real estate in 5, 7, 10 years, refinance it. If it's the first refinance or the second refinance or the third refinance, you pull your money out and you keep the assets and you keep them refinanced, or you keep them cash flowing. The ideal scene is not to buy these great quality assets because, Dick, the worst thing in the world is when you sell a great asset, now you got to go find a new great asset.
Yeah.
And all these deals that we're putting together, they're tens out of tens. Like everybody.
You can't. Those 2 deals you're in the Heights, you can't even build those again. I don't know what our those assets are just.
The rationale that I got was that they put floating rate debt on it because you had less breakage costs in 2 years, and you thought that.
Yeah, that's right. We believe. Yeah, our plan was we believed we would be able to refinance those in 2 or 3 years. You put 10-year debt on these deals. This is why none of the big institutions use 10-year debt, because they have a 3 to 5 year fund cycle. They want to be out in 3 years because they want to get their fees. Do I like fees? Okay, whatever. But I'm not in it for the fee. I'm an 80-20. I'm in it for the 20% of the upside. Preferably, I'm in it for returning your money and getting 20% of infinite. 20% of infinite. You have your money back. I have my money out. Andres has his money out. We don't have any money in it. We still get $1. This is tremendous amounts of wealth that's created like that. And because I can now take my money without a tax event, go reinvest in new assets. I want to accumulate assets. I don't want 38 properties. I want 300. And the same thing for you guys. Like we would literally create a super fund owned by regular people, but our assets look like a Blackstone. But underneath it is money from regular families. This has never been done before in America, ever. And first of all, you couldn't do it. You couldn't do it 7 or 8 years ago. And the technology didn't exist to do it even 3 or 4 years ago. And even if and only until somebody could build an audience like I have, even with the laws and the technology, there's only a couple people that could pull this off. And it can't be the Kardashians, because they don't know how to manage, they wouldn't know how to manage real estate. They just know how to manage a brand. So you got to have an audience. You got to do it by the law. You got to know how to manage cash flow. You can't steal from people. Sam's perfect example. Guy's a genius, and he's going to go spend 30 years in jail because he couldn't manage cash flow. He had zero discipline. Right? So.
Love that.
Yeah. Hope that helps.
Appreciate it. Thank you, Grant. Thanks for the bonus distribution. Merry Christmas.
Thank you, man. Go ahead, Danny.
Go ahead, Danny.
Hey, GC, how you doing, man? Long time no talk.
Thank you, Danny.
Merry Christmas.
Come on, man.
Thank you for the Christmas bonus, man.
Mary, you like that, man? Was that a nice surprise?
Yes, sir.
Let me tell you,
very much.
I opened with, I was going to tell you guys a joke. My sister, Pam, called me yesterday. My distributions are half of what they were the month before. I said, well, let me check into it. Well, she's complaining because she thought her bonus was her check. See, that's what family does right there. She didn't see the first. She didn't see the first two.
Man, I really appreciate it. I got 1.2 with you, and
1.2 what? 1.2 what?
$1 million.
Good for you, man. Congratulations.
Yeah, no, appreciate you. Appreciate Ryan.
You're an inspiration to everybody on this call. People looking at you saying, shit, if he could come up with 1.2 million, I can.
Hey, come on now. Hey, well, hard work, put it to the side. Make it work.
Yeah.
Mailbox money, man. That's what you want. Cash flow.
Fact.
That's what people need to hear. But listen, brother, I was in a business meeting about 2 weeks ago. One thing led to another. And sidebar you here for a minute. But long story short, bam, if you didn't pop in my mind, there's a way to add $50 worth of revenue per door to what you're doing already.
I like that.
Minimum, I do too. Minimum investment. But it's going to, we'll need to sidebar that deal and have a conversation about it.
Get a call with Ryan and CJ.
Okay, I'll do that.
Okay.
All right.
Because $50 times 12,000 units, that's a lot of damn money.
It is a lot of money.
What is that? $6 million a month?
It's a no-brainer.
$72 million.
I'm being conservative with the $50.
Yeah. Good, man. I like the way you talk, man. I don't like the way you wear your hat, but I do like the way you talk.
Well, how you want it, man? You want it down here? You want 10? Hey, you want my 10X hat? I should have put that on.
That's the problem, man. Yours is tailor-made. Mine 10X.
Oh, okay. I got you. All right.
I think it's just you boys from Louisiana.
Yeah. Okay.
Yeah. Thank you, Grant. Really appreciate.
Thank you, guys.
Briefing us on that. Yeah.
Go ahead, Danny. I think Danny had one other question up.
Danny, you got a question?
No, I just said I appreciate you. Merry Christmas.
Okay,
Happy
brother.
New Year, guys. We'll talk soon.
Appreciate you, man.
Thank you, Danny. And Danny, let's connect on that 50, and then also if you want to throw more in this opportunity fund, would love to have you in this fund. I know a lot of people they're reaching out directly and asking questions. This honestly,
and you got a lot of hands up, Ryan. So you mind taking the rest of these questions, Ryan?
I'm gonna do them.
Okay. Okay. Beautiful.
I'm gonna do Jeffrey. I'm just like guys. I'm with Grant every day. Like the amount of energy and effort and push that he's doing right now to get these portfolios.
There you go, guys. So I just finished my call. update to our investors. Any questions you guys have in the room? Appreciate you hanging out, listening to the call. First time ever done in the history of the world.
Hey, you're like the soldier boy of spaces. You do everything first.
I like. Well, I heard somebody asked Elon that once. He's like, "Would you ever do a Tesla call?" And I'm like, "You know what? I'm gonna do that." So, if any of you got any questions, I'm happy to answer. I know there's not a lot of people here, but there's enough to matter. Just raise your hand. Oh, you got to add people, man. Who's running this room? Oh, David, you can't, huh?
I cannot. No.
Sorry, bro. Let me invite you. Let me get rid of Ryan. Ryan can't move around right now. Remove, and maybe I can help. Rhett, are you available to help me?
Yes, sir. I can bring some people up and down.
Okay, yeah. Requested. There's a lot of requested. So let me just. Oops. No, I didn't want to do that. Sorry.
I will say while we're bringing people up, it's great to see the transparency. Shout out to all the haters and the naysayers.
Bro, there's these guys that somebody called me the other day, David, and said, "Man, I saw this YouTube video." I said, "Was I in it?" They said, "Well, a picture of you was." I said, "Well, what are they talking about?" "Oh, they're talking about your fund." I'm like, "Why do you think I would go on their show?" They didn't ask me to go on the show. If you're not, there's no reason to talk about my fund if I'm not on the show.
Yeah, like that's interesting to me because people don't think that you'll show up, but I guarantee you, you'll show up to one of those podcasts and like I've never seen you back down. So I think people should do that more often instead of just trying to use clickbait titles. Why do you invite them for a debate or conversation?
They're trying to run they're trying to get hits for their little their 12 cents of Google ads. Okay, any questions? I got Brian. What's up, Brian?
Hey, how you doing, Grant? I had
Good.
a quick question. I've got a 401k that I had to roll over. I guess it's a self-directed IRA now.
Yeah.
What's the process look like for getting that moved over?
How much is sitting in it?
I want to say it's about 290.
And what state is it in?
Texas.
Yeah. So what we do is we get an accommodator, basically. Like Provident is one of them. Okay, I don't know. I think they're probably in Texas, and they basically do the $250. You slide it over to a Provident. You slide it over to them. It's who's it sitting with right now?
Oh crap! I don't remember. I don't know their names offhand.
It doesn't matter. It's sitting in some IRA vehicle, right? Some retirement vehicle. It gets slid over to a similar vehicle. The IRS has approved all these. There's no tax implication to you, and now you're self-directing into this real estate asset. I will then distribute every month, not to you, but back to the fund, back to the IRA. It will start building up cash reserves, and then when we sell it, I will distribute to you at that same place, and you won't pay taxes there either.
Okay, so all the distributions, and at the very end, the final payout all goes back to the IRA.
Yeah, exactly. Everything's got to stay there until, how old are you?
51.
Yeah, for the next 10 years or so until you're ready to say, okay, I want to start making distributions. I want to start pulling money out of my IRA. I got a sister. My sister, she was 63. When do you get it? 63 or 65?
65, I think.
Yeah. So I convinced her to dump her IRA and move it in with me. I did basically in 6 years. I made her more money in 6 years than she had made in 36 years in a retirement account.
Okay. What would be a reasonable on, let's say, 290 after 10 years?
290 is probably going to earn a double for sure, plus the cash flow.
Okay.
So, and I'm being conservative.
Okay. Okay, great. Thank you.
Okay. Yeah, you're welcome.
All right, it looks like we got Trenton with his hand up. What's going on, Trenton?
All right, we'll go to Kevin then.
What's up, Grant?
What's up?
I got a quick question for Grant. When you do bonus depreciation and cost seg on these properties, how does it affect the investors?
Yeah, great question, and we should have answered it in this call tonight because it is a tremendous impact for the investor. Let's say that you're 20%. You're 20% owner in the deal. You get 20% of the depreciation. If I do a cost seg, you get 20% of the cost seg. So I can tell you this year the 50 million that we sent out, no one will pay taxes.
Okay, awesome.
And the 50 million I send out next year, they won't pay taxes either because I know what my depreciation claims are. We do the K1 and we send it to you.
But
So
then
let's
when
say
you
you
when,
put
but then
you
when
let's
you
say
send
you
me that K1, that's earned income on my end. Then I give it to my CPA. Then
no
don't I get
yes
taxed?
no you get a K1 that says that. Let's say you gave me $1 million and I sent you 60 grand.
Right.
I'm also going to send you a loss for like 400,000. So
Got
you
it.
actually have a loss of $340,000. If you're a professional real estate investor, then you can actually push that against your other earned income.
Got
So
it. Okay.
this year, for instance, my income this year will be probably 100. My net income will probably be I don't know, 50 million. I won't pay any taxes this year.
Got it. But how does it affect on the recapture if you decide to sell?
Well, 100%. I mean, sooner or later they're going to get it. You want to pay now, or you want to pay later?
Got it.
You,
Okay.
you know, for me, like now, let me just show you another little play. I'm going to give you the depreciation now, and in 7 years, probably what I'm going to do is I'm going to send you your $1 million back and say I'm refinancing a property. Here's your $1 million back. You don't pay taxes on that either. My goal is to never sell these assets.
Got it. Okay.
My goal is for you to get your depreciation, get your cash flow, protect your dough, not lose money, and wait for inflation to inflate the asset. At which time I will recapitalize your original investment, which is a non-taxable event. The first did it because of rents. Okay, cash flow starting to explode. Now you've made $2 million, and we still own the asset. If you own 20% of the asset when we started, you still own 20%, despite the fact that I've sent you back who knows how much money at this point.
Got it. I also have another quick question, if you don't mind.
And by the way, none of the other REITs, syndicators, or Blackstones do that. Once they
Right.
send you back to 2 million, you're out.
Right. I have a follow-up question, if you don't mind.
Okay, yeah.
You are buying basically Class A properties that are in great locations, that are in great condition. So how are you able to, I guess, cash flow or add value
Yeah.
in order
So
to increase rents?
yeah. So well, timing, and location, right? So I know jobs are coming in. Like I don't need to fix the kitchens if I have 5 jobs coming in for every apartment that was built in the market.
Right.
So for I got people coming from New York, bro, like blowing my rents up.
Got
And
it.
they're not coming here. I got people renting units from me so they can live here half the year. They're earning. They're avoiding $3 million in taxes. New York, New Jersey, Illinois, California taxes, just simply because they have a place to stay 30 weeks of the year. So number one. Number two, I don't just buy Class A properties. But we never ever compromise our location. So last year I bought 900 units. They were all kind of B properties. I've raised those rents from $2,200 to $4,000 in 10 months, and that was on over 800 units.
Got it. Okay.
So do the math on that. So this was a value add deal. We actually haven't added that much value, but some of them we have. And the rents have gone from 2,200 to almost $4,000, $1,800.
Yeah, it's a lot of money.
So it's a lot of money. So it's either got to be a great location where it was a new building, great location. Typically, when somebody builds a new building, they're going to have low rents going in because they want to fill their building up. And then it takes me about 18 months to get those rents back to what they should be across the whole property.
That makes sense. Alrighty, thank you.
Yeah, thank you, bro. Appreciate everybody being here. Nelson, how you doing, man?
650. I'm doing good, brother. I'm doing good. Let's go.
I saw you this morning at 9 o'clock. Here it is, 9 o'clock, and I'm still going.
Let's go, baby. That's a
Still
fact.
going. See David Hill too. Nice to see you, David. Is Acom here?
What's going on, David?
Hey, go ahead, man. What's your question?
What's up, brother? Hey, it's my first time even talking on this app, so just appreciate being pulled up, and just want to say, thank Grant for such a tremendous real estate event. Just excited to get out there, find that 32 unit. We're searching already, and I finally opened the door this weekend, threw some money into Cardone Capital. It's about time I did, so I'm just excited to be part of it, and going to start adding every month. And I don't really have a question, man. Just excited. I guess to maybe ask Grant, like, if I'm a partner on a 24 unit Grant. I just sold a 2-family, pulled out about $150 out of it. Where would you start looking for that 32 unit?
Wherever you are, I would start wherever you are, right? So, but I mean, yeah, I would start where you live. If you live in a good place. Now, if you live in,
I'm in Massachusetts.
yeah,
so,
probably, I'd probably find somebody, I'd probably find somebody else to invest in that's in a friendlier landlord state. Nobody has to pay for anything anymore. It's going to get carried away in some places. And it's going to become problematic for owners. So these politicians are getting the only thing they can run on is I'm going to give you free weed, a free phone, and free rent. So I'd be very careful in some of these more liberal states because you can't collect your rents. And look, I'm not bashing on liberals. I'm just telling you guys, like, if you can't collect your rents, you can't pay your mortgage. Okay, I'm bringing other people up, guys. If you have a request to speak, just raise your hand. And I'm happy to give everybody a chance to ask a question. And then, how long is your $100,000 locked up? You need to assume it's going to be locked up 7 to 10 years. So I can't tell you guys it's going to be out. Nobody can guarantee you money's going to be out in 3 years. They're lying to you if they tell you that.
No, I appreciate it. That was an easy answer. I've got a few people that I'm in a chat with who are all asking me that question. So I thought I'd just throw it in there and ask. I appreciate it.
Beautiful. And let me just tell you guys this. This is the problem that's going to take place with institutions. Institutions have made 3 mistakes in this last cycle. They've offered redemptions to their pension funds and the hedge funds, the big giants, the whales. They've offered preferred return to their investor buddies, and they've offered a 3 or 5 year fund cycle. All 3 of those things are going to kill these guys. The 3 to 5 years is in their face right now. Interest rates exploded on them. Redemptions are being asked for, okay, and the preferred return. Preferred return will be anywhere from 10 to 12%. Interest rates are 7. Let's take the lower numbers. 10% plus the 7, that's 17%. Now they got redemptions. They can't raise money. 3 years, they'll 50%. The property has to go up 50% in 3 years just for them to break even. Okay, man, the problem is of mega proportions. The opportunity is if you have a lot of cash, you know what you're doing, and these people know who you are. And so if I can pull 30, 40, 50 properties off the market right now and take advantage of them, solve their problems, all our investors are going to benefit. The question is not if I can do it, it's how many times I can do it. I could literally go from a $4 billion fund to a $20 billion fund in the next 2 or 3 years through this cycle. And then we as a group of people, it would be, 25,000 or 30,000 investors, regular people. I've never taken money from an institution ever. Which these guys all take money from one another. You guys understand that, right?
100%.
Do you find, Grant, that you run into issues with investors who, get into trouble halfway through that time period, or is that something that doesn't come up as often?
You mean somebody that invested with me?
Yeah, like if someone's investing for you and then 6 years down the track they're trying to get their money out. Is that something that you run into often?
Yeah. Hey, I got a guy right now. Hey, man, I'd like to pull out of the deal. I said, really? Why? Well, man, I'm worried about the cycle. I said, yeah, what? Okay, I got it. You understand that we have a redemption plan here, right? He's like, yeah, no. What is the redemption plan? We don't have one. We don't redeem. If you wanted to be liquid, you need to go to Blackstone. By the way, they don't redeem either. They just told you they would, but they can't because they gave all the money to the Florida State, Calper State. They gave it to Harvard because they always give it to their buddies first. They don't give it to the little people. There's no such thing as a redemption, folks. I don't care what they tell you. You ain't never getting a redemption. So the redemption's not good for you. Now, if that guy calls and says, yeah, I'll redeem you right now, what am I telling him? I'm giving him his money back because I know there's money to be made. So now, do we have crazy situations? Hey, Grant, my mom's dying of cancer. I got 50 grand in your fund, man. I need the 50 grand to help her out. Dude, I'm going to write him a check for 50. But I'm not going to do it because the guy changed his mind.
Thanks, Tyler.
I
Medical,
appreciate it, guys. Thank you.
Yeah, thank you. Let's go to you, Medical.
Thank you. First of all, Grant, your 10X book turned my entire life around. Thank you.
Oh, dude, that's awesome, man. That's good to hear.
Well, the story was...
Sounds like you got your $20 worth.
I don't even think I paid that much. Yep.
Yeah.
And I've been following you hardcore ever since. So thank you. And that was about 2011. So I'm interested in real estate. I've been following you on my business side of things, invested in some of your stuff. But my real estate question is, I live in Massachusetts, unfortunately, and gentleman asked a similar question, but I'm actually, I have family and I have potential investment money that I can dip into. I'm not sure, but I think I could if I found the right property. And I'd like to, and I have some of my own, look for about a 32 unit, anywhere from, I hear you say 21 is a minimum, I believe I heard you say in the past, for management. I want to be between Tampa and I'm friendly with that live and family that live.
$5,000, then you can know every property in your market. So that's you paying for it. You can go to brokers. You can go to all the major firms. I mean, the big players over there are Newmark in Tampa is Newmark. Guys to call you back.
Yep. Okay.
The third problem you're going to have is, if the deal is going to probably be bigger than you can do with those guys. So the LoopNet is a thing. You can also go to the county records, city records, and find out who bought a property in the last 3 years and has an adjustable note on it.
Yep. Okay. Cool.
The
That's a
easiest
good
thing
idea.
you could do is find a guy like me that does what I do and put
Yep.
your money with me and keep doing whatever you do every day.
I'd like to learn a little bit more about that. I heard you say something about using retirement funds and transferring them,
Yeah.
and that was your articulation of that was the first time that I've heard it that was extremely appealing to me. I'd like to learn more about that if that's
Yeah.
possible.
Well, because Fidelity and Merrill Lynch don't tell you about it, but Edwards Jones ain't going to tell you about it because they want you trading in and out of stocks.
Mm-hmm. And all I have to do is commit for 7 to 10 years or until retirement age, or is it
25 years before you get that money anyway.
right?
So
In 25 years, is there a written guarantee that I get whatever my percentage is back at that point if I haven't yet?
you might not even be alive by then.
That's right.
So like, they no guarantees, man.
Okay. But I'm
No,
sure that
what guarantee you want me to give you? Like, I can guarantee you some shit's going to hit the fan between now and the 25 years. But right now, you can't get your retirement money anyway without paying a penalty.
correct. I could transfer it
How
into
much money do you have in a retirement account right now?
not much.
How much?
I'm not.
How much?
My wife probably has 25 grand. I probably have 15 grand, and then I've
Okay.
got
Well, if
about
that's what you that's
800 grand
800.
personal, not in retirement, that I can dip into through home equity, through
Yeah. Okay.
business. Yeah.
Well, yeah. So, I would worry about your 800 more than I'd worry about your 25 or 40. But your 40 grand, if you started with 40 grand in a retirement account at the beginning of the year, it's probably lost 8,000 this year.
Right.
You just don't even look at it anymore. And you're not getting any passive income. You're not getting any income from it. So, you could move that 40 grand over to Cardone Capital. You're going to get a check. You're going to get money every quarter or every month, as long as we have the cash flow, and the property's going to grow. Like in 10 years, why are you looking at real estate in Tampa if you don't think it's going to go up in value? It's all going to go 10 years from now. It's going to have more rent, more income, and it's going to be more valuable.
Exactly. Yep. 100%.
I'll bet you can't tell me the stocks that you're invested in your retirement account right now. I bet you can't tell me 5 stocks that support your retirement accounts.
Oh, I hate it. It's not even. I can't even connect with it. The real estate makes sense.
That's what you did. That's what Wall Street does.
And I could put, say, 20 grand a year and call it retirement, but go into Cardone Capital. Is there a
Yeah,
way to do that?
exactly. Yeah, is it self?
All right.
Okay. Hope that helps.
I will.
But I think there's an opportunity because so much real estate, and maybe it is something that I should look into doing, for myself instead of having, these other people doing it.
To sell. Vermont, Colorado, Texas, Houston, Austin, Dallas, Paris, and quadruple it. Miami, Fort Lauderdale, Miami, spending money. The Carolina money. There's not been since 1945 rents have gone up in America since the end of World War II. That's 70 years. That trend.
You wouldn't get that for 2,800. So it's
Okay, next question. Thanks, VT.
Let's go to Ritzy.
Will you ever bring back Whatever It Takes?
Yes, 1,000.
That was such a good
We're gonna
show.
produce it this year. By the way, I love that.
Send me a link to apply. Send me a link to apply. Okay, I'm excited.
Absolutely. Let's go to Trenton. Trenton, what's going on, man? How you doing?
Been working at a FANG. They're basically making a claim that you're selling.
So, first of all, I have not seen the video, but I can tell you. An idiot. So, property.
Yeah, well, I think that they're saying that there wasn't two mortgages.
Use so they can get 12 pennies from Google, as you know.
No.
Said it's very important, guys. Grant, just like any
$1 in cash.
people like to come up here and try to get a clip or throw a moment.
Do you understand my lenders? $600 million loan by a major institution would call me up and say, hey, you cannot possibly pull that off. Dogecoins, altcoins. I'm not saying Bankman Fried. This is different properties with 4 different mortgages. It's recorded with deeds. That's the beauty about real estate. You can't steal the real estate. You can't move money. The money's going into a piece of property. You can't do tricks with real estate. Okay, go ahead, man.
Hey, Grant. It's good to talk to you finally, man. Dang, man. So it's good to finally be talking to you. But I just wanted to just ask you, what would you do if you're a 32-year-old guy? I'm from Indiana, making about 40,000 a year doing tree work. It's kind of tough work, So I was kind of paying more attention to some of the things you've been saying, and looking to kind of get into real estate. But I'm not really sure where to start. I got a 401k with about $10,000 in it. Making about 40,000, 45,000 a year.
Yeah, bro. Every time, look, if you can live on 30 grand, every time you get 10 or 15,000 extra, boom, throw it in a real estate deal. Hustle. Don't keep any dough. This would be my advice. Don't keep any money. Bury your money in real estate, the cash flows, and go hustle money again. Go do more trees. Go do more lumber. And then every time you get another 10 or 15,000, don't improve the quality of your life. Improve the quality of your assets. And you're 32 years old. Over the next 10, 15, or 20 years, you'll look up one day and tree work anymore. The real estate's going to take care of you.
Yeah, that was definitely what my thought process was, for sure. Buy a 1-bedroom house myself and rent it out, or do you think it's better to just kind of just throw my money in with somebody that knows what they're doing already? Or
I would throw my money in with somebody that's buying big deals. That way you get protection of big deals rather than protection from one house. Because the moment they move out, you don't have it. You don't have any cash flow. That's the problem with the 1 and 2 unit deals. The moment they move out, you got another job. Now you're going from cutting trees to finding a tenant. You're fucking exhausted. You're tired. And now you're like, I got to go, goddamn, I got to go do an ad. I got to go see a tenant. And then you got to see 10 people to rent 1 unit. It's just another job. You don't want another job. You want assets that you don't have to take care of, the cash flow.
yeah, for sure. Do you think do you guys got a way that somebody can just invest like smaller amounts of money? If people don't have a whole lot of money, can they throw in like $100 a paycheck or something?
Well, you can't do 100, but you can do 10,000. You can do I think at the minimum is $5,000.
Okay.
I can't take hundreds, so.
Okay. All right, so that makes sense. So that's really the first step, just save up some thousands and then get going with that.
Yeah, 5,000. Call me up, boom, we'll put it in a deal, and then go get another 5,000, put it in another deal. I'll never let you down, man.
What do you think about the Indiana market?
I like parts of it, and there's other parts of it I hate. So stay away from the rural stuff. Get.
As possible. Oscar, you've been on stage for a while, bro. Do you have a question?
Oscar.
Grant, just wanted to thank you for doing the investor single day from you.
Not every day, but I do still use that discipline. So I'd lie to you if I said it was 7 days a week, but it's probably 4.
The Real Estate Club, and just wanted to say that has me sold. That's the real deal. So I will be joining that. And
cool, man.
I'm 19 years old. I just want to curious, what's the youngest person you've ever done a deal?
I don't really look at age much, man.
Sure. Hey, just so you
people.
know, funny, going to that event, I couldn't even stay at the JW Marriott. I had to hustle Airbnbs to get a place down there because they won't let you in at 19. How funny.
That's crazy, man. Why don't you just stay with my place, man?
Dude.
Yeah.
But I appreciate it, Grant.
Man, appreciate you coming up.
Thanks.
Appreciate
That's
you, Ryan.
impressive. That's impressive, by the way. Keep it up, young man.
Appreciate it. Thanks, guys.
Jesus, David, what you mean, young man?
I mean, I'm
What's wrong with
44, Nelson. I know I
get
look
your
young.
old ass out of here, man. Let's go.
All right, and then what?
Then take that money.
What's like the minimum?
Go get rich. Go get rich, bro. Go turn that 19 grand into 38,000.
That's
How you guys doing?
Bro. You were leaving, man. I thought we were gonna hang out last night.
Dude, I would have loved.
Let's go to somebody else. This guy's acting like let's go to somebody else. This guy's acting like he's got issues.
Anyway. Position, I'd say it's about 260. Making a profit on our money.
Yeah, exactly.
So
10 trillion. They under management.
Yeah, and assets are good. I mean, I don't want paper.
But I can't. You have to pay for it yourself. You move it over.
I think I can handle that. Yeah.
Okay.
I think I can handle 1%.
The 260, assuming that I take on a loan like I normally do on these deals, the 260 would then be sitting in a deal that would represent almost $1 million worth of property. So you immediately just increase the value of your protection. You follow what I'm saying? Because we have leverage on the deal. Typically, at some point, we're going to have leverage on this deal that's going to 4x your 260. You're going to earn cash flow on the 260. Let's say you earn every year you earn $15,000. I think that'll be about $15,000 to $18,000 a year in cash flow. That money, that $18,000, $1,500 a month, is going to go back to your retirement account. You're never going to touch it. It goes back there. That's going to start growing over the next 2 years, 5 years, 7 years, 10 years, because of the real estate we buy. We know those rents are going to keep going up in these markets that we're in. So that 10 years from now, your husband now, he's not getting $1,500 a month. He's probably getting more like $3,000 or $4,000 a month into the retirement account, which is going to be plenty for him to pull out of, to pull back when he's ready for retirement to live on.
Okay.
The capital
I
in the
mean,
fund.
well,
Yeah.
maybe
And
not.
watch what happens. Okay. If we do what I've done, I don't know, 11 times already out of 38 of our properties, I'm going to refinance this property somewhere around the 7-year mark, 6, 7 years. I've done it in 37 months before. I'm going to refinance it. I'm going to send you back his 260. I'm not going to send it to you. I'm going to send it to the retirement account. Okay. So now you have your 260 back in. You still own the real estate. You still have the cash flow. And we're going to do it again. So at which point where I sell the asset, if I ever sell the asset, I will send you back. I don't know. Let's say your deal's worth. Let's say it's worth. Your position's worth $1.5 million, but we have $750,000 worth of debt on it. I said you're $1.5 million less the debt. You got $750. You put in $260. You tripled your money, and you got all your cash flow, and you were never at risk of Vanguard, going upside down. Which who knows? I mean, Lehman went out of business. Bear Stearns went out of business. Enron went out of business.
Yeah, I mean, I know.
Yeah.
That's my husband knows about those businesses that go out.
Yeah.
That's kind of how we make our money.
Yeah.
I have another question for you. So, I'm from the San Antonio
Yeah.
area. I wanted to ask you about between San Antonio and
I
Austin.
love
My husband
Austin.
used to
I
work for a
love Austin.
my husband worked for a must company. Yeah, he's
I
a
love.
he's a
Yeah. I
consultant for
love
those
Austin.
companies, and I
Yeah.
knew SpaceX is building in Bastrop, which is
Yeah.
right outside of Austin, and
I like Bastrop
as
better
well
than
as the
San
Boring
Antonio.
Okay, all right. That's what I was going to ask you. Not a lot out there though. They're not building apartments. A lot of single family, not a lot of apartments.
Yeah. So
And I think that's a wrong move. Do you not think that's a wrong move, considering that he's going to be bringing so many out from eventually from those tech high areas?
yeah.
California.
I mean, look, Lennar just put up 5,000 homes for sale. They want to sell them in bulk. So I'm trying to get a meeting with Lennar. I can tell you some of these big groups, Open House, Zillow, Redfin, they all tried to buy a bunch of homes in scale. They lost them all. Not some of them, all of them. BlackRock already wrote off 1.7 trillion TT this year in June. They wrote that off. Everybody acts like it didn't happen. Blackstone has got $900 billion worth of assets under management. Probably a third of their portfolio is going to have problems. So there's going to be tremendous opportunity. San Antonio would not be the market I would be in right now, but I love Texas. I would be in Austin. I'd be in Houston. I would be in Dallas, Fort Worth. I would stay away from college towns. And, there's 5 or 6 other states that I love. So love, if you want to reach out to my team, Leah, on the retirement thing, I would do that immediately. And for everybody here that has a retirement account with a Vanguard or whoever these people are, these machines, I would get your money out of the stock market. And I wouldn't wait until next week. I would do it tomorrow.
Okay, well, I'll be reaching out and get that paperwork started.
Keep following me around.
Okay, thanks.
Peace.
Bye.
Hey, Grant, Stefan Predal here. I got a. Can you invest only even thousands, or can you just do the whole IRA right in?
I think you could do portions of it.
Okay, I didn't know if you wanted to keep everything in even thousands because I know like a lot of it kind of seemed like it was always in thousands.
Look, I've had people send me $489,102.57.
Okay,
so
no, that makes sense.
Yeah, I mean, if you're going to do it, I would do the whole thing personally. I had a $2.1 million in a retirement account with Fidelity. I moved all of it. It was a self-directed account because I'm self-employed, and I moved the entire thing to be self-directed into real estate. It's been sitting there for I think I've been in that thing for 16 years. Every month I get a check. It just keeps growing. So when my buddies are losing 23 or 25% in a year because of the market, mine doesn't go down. It just keeps adding cash and
yeah. So that was the second part of the question. What happens to the cash flow on that? You can't get paid actually on that, can you?
No, you can't.
Yep.
No, I can't send you money. The money's going to go to that account, right? So
then do you keep getting a larger percentage of ownership, or does it essentially just wait to get put into another new deal?
Well, my
like
goal
as far
is
as like
when we refied, like that $2 million was in an account. When I refied it, that 2 million turned into like $6 million. Like it exploded because I'd been in this one deal that was there. I was there 3 refis, 2 million, 4 million, 6 million, and then the cash flow. Okay, now that was an account that I wasn't old enough to start pulling out of that retirement account. My sister, on the other hand, she was 60, whatever the age is, 63 or 65, and she started pulling down. So, she pulls $8,000 a month out of that retirement account. And then one day I said, why do you keep pulling down? Why don't you just, grab it all? She grabbed it all, and we went and reinvested the entire thing in a real estate deal, which, by the way, is an extended retirement account because, when I pay you cash flow directly and you get a K1, I'm offset.
Yeah, I was going to say, I get a K1 on that then too.
Yeah, you get a K1. Now, you're not going to be able to use it in your retirement account, but you're going to use it when you come out of the retirement account because you're already protected. Your K1 kind of just goes. You're already protected. You don't have a tax implication when as long as you're sitting in that retirement account. She pulled all her money out after she had a score because she was 65. We did it again, and she's like, "Oh my God, I'm gonna have to pay taxes now." I said, "Baby, you're gonna be getting a K1. Your K1's gonna offset your passive income." My sister gets $8,000-9,000 every month. She doesn't pay any taxes. She gets a loss every year, equivalent. Last year, Brandon, you in the room?
Yeah, I got
He's probably gotten 17 million times 350 million. I'll bet you he's gotten $30 million worth of depreciation, but he only got $800,000 worth of cash flow.
yeah, I got it.
For the cash flow.
Yeah, I got a nice loss last year against my income.
He's got probably 20 times his cash flow in. If he's a professional real estate investor, if you're like I'm a professional real estate investor, I can offset it against all of the earned income.
Yeah, and if you're not a professional real estate, like this year, I'm going to offset it against other income. So one way or another, I'm going to be able to capture it.
And that never dies, by the way. It has a life of an extended life until it uses. Yeah.
Yeah, and to be considered professional investor, 15 hours a week?
750 hours a year. And you got to file. You got to file with the IRS.
Okay.
Hope that helps, Stephen. How much money are you sitting on?
401k, like 70, a little over 70,000.
Yeah.
Got some other cash and some other real estate assets.
Yeah. I would do it all. I'd get it out.
Yeah, I mean the 401 self-directed is no brainer, really.
It's a no-brainer, bro. It's like you're protecting it with a real asset.
Google, what asset has created the most millionaires? See what the answer there is?
Yeah, because
multi-decade.
Because real estate has so many different ways to produce wealth, not just one. The income's one thing, the tax advantage is another thing, the scaling without any work, the passive income, inflation works on it. I mean, those are 5 ways. It's just so many different ways where, the average company in America only lasts 7 years now. My real estate will last longer than Facebook.
Appreciate you, Stephen. Let's go to XT.
Hello, everybody.
Hello, XT.
My name's Christina. I'm my boys. We've got about $220,000 in a trust. Spinning their brain, and I want to suggest to them that they take that money and go together and buy a good suggested to them at 18, but I don't trust to have that money in the trust in the Fidelity account until they're 30.
Yes.
Because I'm very skeptical right.
So I would not do what you're saying.
Okay.
What I would do is like my kids, I have a 9-year-old. No, I have what do I got? 13 and 11. My kids get a check every year to work for me. They don't get the check. We say, hey, here's the amount of money that I'm gonna pay you to do X, Y, and Z this year, like your trust. That money then goes into Cardone Capital. They get a distribution every single month, and they can spend the entire distribution every month. And every year they get another check, and that money goes into Cardone Capital, and they get a distribution. So it stacks, right? So like right now they're earning $700 a month. By the time they're 18 years old, they'll have $1 million invested in property that they don't manage, they don't touch, they don't visit, they don't Airbnb, and they get the cash flow. They will only be able to live off the cash flow. They can never touch the capital because it's in a non illiquid asset. That asset will now double every 10 years. We know it doubles every 10 years. I've been doing this 35 years. Every decade up, and they will always live off the cash flow. So, when I'm dead, I'm not going to give my kids $200 million to manage. They can live off the cash flow. And that's what I would tell you. I would take that. How much money do you have?
So they can't touch it until they're 30 unless it's for a house. But together they've got for a home and on college.
Yeah, well, good. So, and you shouldn't have them wasted on a home because a home's a bad deal too.
Okay.
A home's a terrible investment for
but
everybody.
How do I get that money into some assets without, I don't want them.
By the tenants at the real estate, by the operations. They're not paying the mortgages, right?
Mm-hmm.
So the rents are going to grow over the next 10 years. The rents are going to go. They're probably going to, if they're in the right locations. Now, if it's in a bad location, then no, you got states right now that are starting to kill the Airbnb. They're actually starting to file policies and laws against short-term rentals. I would tell everybody here, be careful about short-term rentals. It might not last.
Okay.
And I would find somebody that you trust, Christine, and invest the 200 and let your kids manage cash flow, not a property.
Okay. Okay. It's going to be convincing the attorney that's in charge with the trust that Cardone Capital's. So I'll have to look at the language of that, and hopefully I can convince them to do that.
Ask your attorney to just ask your attorney, say,
Yeah.
Yeah.
Appreciate it. Thank you so
Yeah,
much.
you're welcome.
Messaging you and picking your brain.
Okay.
Hi, man. I've been following you for many years. I started my company back in 2015, and you definitely 10x'd it with your mentality and all the free and all the free knowledge. Atlanta, and I know you mentioned Savannah earlier, but when I look around Atlanta, it's kind of dried up, is what it seems like. Mm-hmm.
And it's not going to stop. Now, that being said, when I talk where there's barriers, I was going to say Buckhead, but you guys got a bunch of problems over there right now.
Yeah, crime is terrible.
Dude, it's crazy.
You got to walk through metal detectors. I used to live right across from Lennox, and I'd walk over there. You got to walk through metal detectors just to get into the mall now. It's insane.
Yeah. So Atlanta's one of my favorite markets, though. Savannah's a favorite of mine. Like the Carolinas are awesome, dude. Like,
yeah.
So, but you're in the right area.
Do you think like Pooler and like the outskirts of Savannah, like Richmond Hill and stuff, is going to blow up?
I like Pooler. We own assets in Savannah, so I like Pooler. Just go big, bro. Go. Don't do little units. Little units go back to banks.
Yeah, I saw you got a message. And I did pretty well for myself this year, and so I got some liquidity that I need to really lock down an asset. So I'd like to talk to one of your team members and see if I can't get some of my money over to Cardone Capital.
How much you sitting on?
I got $1 million right now in my account, and I'm looking to maybe take 250 of it. I don't know what the next few years is going to bring, so I want to hold on a little liquidity for my business. But but I'm looking for about 250 to put in right now. I got one of my employees, actually two of my employees, they've been saving and making good money these last few years. I think they want to go in on it as well. So we might have like 350 to go in.
Let me tell you. Okay, and that is a non-taxable event to you in the first 3 or 4 or 5 years. 60 grand a year to you is like $120,000.
Right.
So you're earning literally. Plus, you have the tax write-offs. You have the depreciation that comes with it that carries forward into the future, and the $1 million will represent, before I get a deal, $3 to $4 million worth of assets. So your million's protected by $4 million piece of property that cash flows to you tax free.
Mm-hmm.
And then if that thing doubles, you understand your $1 million doesn't have to double. If it goes up 50%, it tripled. I want big assets. I can't
Stress it enough.
stress it enough, man. You want big assets. Brandon that was talking earlier, his 17 million probably represents $50 million worth of assets.
Million is the depreciation value that you take advantage of on the tax side, right?
We can't depreciate. So he's got 17 million, but he gets 30 to $40 million worth of depreciation.
Will there eventually be a domino?
And we bang it, bro. We bang it. We accelerate it. We accelerate it in the first year. Okay. Now, is there going to be are you going to have to pay one day? Yeah. Unless we never sell it. We have right now. I went and stole some real estate. Okay. I sold everything before 2008. And then I in 20 million that day. That property's worth 300 million bucks today.
Damn. You still hold it?
Oh yeah, I'll never sell it. You kidding?
That's incredible. You're brilliant.
I mean, no, it was the real estate was brilliant. I wasn't brilliant. It's just if you just wait in the right piece of real estate, that it's just win. And it was scale. It was 1,012 units. So every time, just do this math when you get off with me. Every year the rent went up $100 a year, which is only $8 a month. Okay, multiply that times. That's not the basis in the property, and that's what we're going into right now. I am going to build. I'll have a cash flow of 6 or 7%. We'll probably have flat rents for the next.
The cost up front.
We are Armageddon, and my name is Bruce Willis.
I heard that.
Stuff that's already occupied. Our stuff that's buy deal. February.
That's awesome.
Because even when the world goes to hell, dude, you just want your cash flow.
Right. And
the cash flow won't disappear. Cash flow, rental property was the first sector to improve after the 2000. So, dude, I wouldn't put 250 in. I'm just telling you how confident I am in the cycle. You got $1 million in cash. I'd put $1,000,001 in. That's how confident I am.
I love it.
Because how old are you?
29.
Low money.
Oh no. But sometimes when you build up liquidity or cash, you almost want to hold on. But your method is get rid of it because it forces you to work harder and go get it again, right?
You need to empty out.
Gotcha.
You need to get rid of the million because you know. To have a serious conversation about it, reach out to me.
I definitely will. Thank you for your time, Grant.
Appreciate you, Kyle. Let's go to Laura.
Hey, Nelson, there's so many quality people.
1,000%.
And then there's you.
But shout out to Grant, guys. 9 a.m. in his office. It is 10:30 p.m. and he's still going. You know what
Brandon,
I'm saying?
this was the first. Brandon, I don't know if
crazy.
you know what I did tonight. Annual operations. Brandon, come. You know, what do you say about a white guy that wears a V-neck sweater?
No, thank you.
Hey,
That's
yo.
hilarious. No, thank you. That's hilarious.
Sorry. Actually, I wanted to really thank you, Grant. And I actually sent you an email too because somebody leaked it. Ever since you jumped into Monica's space, I've heard nothing but your voice for the last couple days. It's a little unique. I can guess what you call a serial life rebuilder from a series of unfortunate events. I've had Wells Fargo stole the equity in my home on a loan modification. They do some really shady stuff. I was born in Massachusetts and now in North Carolina. A private sale with from my current property, and I have about $37,000 left to pay it off. And I was so close to doing it early to be able to invest when the government tried to whack me with inflammation. So I feel like I'm always rebuilding, but I really want in on this. I want the series of unfortunate events to stop and this to be my next choice. So if you don't have the capital now to put anything in it, would you go as so far to even just take out a loan? Like even if it's just for I don't have a lot of debt.
No, I wouldn't. I would not do that.
No.
Okay. And anybody who recommends you to do that is a criminal.
Okay. So then you have to kind of wait till you can get the equity out of your property.
Yeah, get your equity out, and then I mean, unless you have a lot of equity. But I would,
Well, it's a private sale. It's not going to be mine until that last.
That is.
Mm-hmm.
I'd probably get rid of that thing because it's been a problem. Get rid of your mistakes and get the money and invest it into an illiquid asset.
Mm-hmm.
The cash flows. Because this idea for everybody in the room, this idea that you want liquidity is not your idea. It is Wall Street's idea. It's Wells Fargo's idea. It is the banks that want you to be illiquid so they can churn you guys, your targets.
Mm-hmm.
Okay. So we've all been miseducated. We are not financially illiterate. We have been financially programmed by institutions that get wealthier and wealthier and wealthier. The group that you mentioned already has ripped off America multiple times.
Yes.
And yet Americans still trust them. And it is just crazy to me. So until you guys wake up to the game, you're going to keep getting gamed.
That's
So
why I chose not to do another mortgage and do a private mortgage. So
yeah,
with a
okay,
private
yeah,
entity.
I hear you.
I,
But
but just because
you need cash flow, Laura, that you can depend on. You need cash flow.
I
You need
do. I
you need
do.
cash flow every month. You need a check that you can depend on from an asset class that can't be destroyed. So
Okay.
you sit down tonight and figure out what asset class cannot be destroyed. And you're going to come up with the same realization I did 20 years ago.
Honestly, you don't have to sell me. I've done a lot of research and I've
Yeah.
been listening to you for 48 hours. I just
Yeah,
want to
yeah.
know how
So
to.
what,
It's just,
thank you for coming up. All right. Well, I hope you break this cycle that you've been in.
I do, and that has about 500,000. The other one has land. They just bought land and they think they made a wrong decision of 44 acres.
Yeah. Well,
Um,
I can't help the guy with the land, but I can help the other two people.
okay. All right. The
Okay.
best way for them to reach out is to text the number.
Yeah.
This,
Text that number and tell them you talk. Put a little thing in there. Hey, Laura talked to me about, and we'll follow up with them.
okay. Thank you so much.
Thank you, Laura. Thank you. Okay, let's take two more, and we're going to call it a night, guys.
Let's do it,
Sam,
guys. Let's go
Sam,
to
and Trent.
You want to go to Trent or Sam?
Sam.
Let's go to Sam. Sam Bankman. Let's talk about it.
Sam Bankman. Yeah, I'm not quite the Sam Bank. Maybe the Sam Bankman of real estate. That's TBD. But
Oh, you
Yikes.
flexing? Okay, let's go, baby.
check it out. So Grant, got a real quick question for you. Over the past 30 years, you've been doing this. What have you seen with hurricanes? Are they buy, sell, hold? Do they create opportunity? What do you think of Sarasota? Just curious historically what you've seen.
Well, I own a deal in Fort Myers. Ian hit directly on Fort Myers. I have probably 10 million, $8 to $10 million worth of, problems. My property will still cash flow. Renovated. I'll have the cash flow while I'm in it, and I'm much more fortunate than a lot of people were over there. And I'm insured. I own 8,000 apartments in Florida. It's never been a problem for me because they're protected.
Yeah, I love that. So post disaster hitting, you got your spidey senses tingling at all in areas like that to look out for some extra opportunity?
Yes, 100. But look, that small hurricane is nothing compared to the economic hurricane that is taking place right now.
Agreed. I'm with you. All right.
And
Thanks a lot.
It exists from California all the way to New York City and beyond and south. It's everywhere. And it involves real estate apartments.
And I think it rhymes with Jerome's owl, if you ask me, but I agree.
Could. Sam, y'all making fun of Sam Bankman, but Sam Bankman could have never pulled off what he did had he been invested in real estate. You guys know that, right? That's never been done. Nobody's ever stole billions of dollars in a real estate deal, much less 30 billion. Okay, Trenton, what's up?
Hey there, I just got a quick question. So I'm graduating UGA in a year and a half from now, and upon then I'll have around $10,000 I'll receive after. Will I still be able to invest in Cardone Capital at that time?
Yeah, you can.
Trent, let's go, bro.
Yes. Yeah. Well, you should start investing now. You should have been doing this when you were 13, man.
So, like
You
you'll
wouldn't be
still be
going to
able
college. If you'd
to.
have started this when my kids started this, you wouldn't even be going to college.
It's a degree in property management, so it's the closest thing.
Yeah. Okay, well that's cool. When
Okay,
you're ready,
so
come work with me. I'll teach you more about property than you ever learned in college.
I know. So actually, I was talking to a recruiter from Cortland a couple
Yeah,
weeks ago.
great company. I know the guy that owns that company.
Y'all were only going to be allowing people to invest for like a year or so. Was that just wrong? I must have heard wrong or something.
That's wrong, man.
Okay, cool. All right, thank you. And another
Quit
quick
smoking that
question.
weed. Quit smoking that weed they gave you at college.
Of course not.
Yeah, of course not.
Another quick question. I'm from the Forsyth area in Georgia. Do you recognize? It's the Forsyth County. It's it's up by Lake Lanier.
I don't know it.
No, okay. I was just wondering just about opportunities there. I've seen it grow so much. It was actually one of the top 10 growing counties. So I was just wondering your opinion on it if you had one.
Never heard it.
All right, cool. Thank you. I appreciate you hosting these spaces. It's really helpful.
Appreciate you, Trent. And look, I want to thank everybody for being here tonight, especially our moderators, Nelson and David. You guys, awesome. Thank you for holding the space. All you guys that came in here tonight and listened to us, appreciate you taking interest in what we're doing. Tomorrow night, I have Robert Malone coming on Twitter Spaces. And if you get a chance, I don't know if we have that link, David. But the last time I had Robert Malone, he was taken off of all social platforms. So Robert's the guy that discovered the mRNA, and he's coming on to talk about Fauci, COVID, NIH. If you guys can join me tomorrow night, I promise you, what he's going to share with you about the vaccine, Fauci, WHO, it's going to blow your mind.
I just pinned it to the top. And by the way, guys, it's part 2. So the first time that Grant did the interview, I believe you were doing it on YouTube, right? Instagram, streaming it all over, and YouTube had taken it down. Instagram muted his volume mid-pandemic, and then he was completely deplatformed. So this is going to be an amazing interview. The link is at the top. You want to make sure that you set your reminder because this is going to go viral.
Links up top, guys. Hit the link. RSVP.
Yeah, and if you have
Let's
any
go.
doctors that want to ask him questions, I'm happy to have a fair conversation. So any of the pro-vax people, Robert Malone is vaccinated, by the way, so he's not telling people not to get vaccinated. But any of the doctors, I know Nelson, you got some doctors coming on that want to ask him some questions. It should be a freaking firecracker interview, man.
It's gonna be a hell of a show. It's gonna be a hell of a night. Trust me, you do not want to miss it. Hit the link up top. RSVP.
Could be violent.
It's gonna be viral.
Tonight I got Roger Stone, and next week I'm trying to get 45.
You get 45.
So keep following, folks. Keep following.
45.
Keep following.
And I think you mentioned Dana White too, right, Grant?
I'm getting Dana for sure.
Right, Grant?
I'm getting Dana for sure. Who else? I got Peter Schiff coming on next week.
Make sure you guys hit that bell. Hit Grant's profile. Hit the bell so you're notified when he starts these spaces. Make sure that you set a reminder for the room tomorrow with Dr. Robert Malone. Thanks again, Grant. Thanks for having us.
Love you, GC.
Thank
Let's
you, guys.
go.
Appreciate you, Nelson. Thanks, David. Thank you, Brandon. Thank you, guys.